usually introduced to the insurance industry by somebody. Generally, the organization that you get connected to has one focus. And then soon after, you start doing some homework to try to get some more training, especially if you get on this thing called the internet or YouTube, or you find us, which you did.
Yes.
You start realizing, hey, there's other markets out there, and the market that my company or the one that's being promoted to me is not the only one.
Correct.
Is mine the right one?
Welcome back to another episode of the Life Insurance Academy podcast. You guys get a special treat. You get to hang out with Roger and I today. And we are in the middle of a series titled The Things I Wish I Knew About Life Insurance Sales Before I Got Into Life Insurance. That's the full title.
That's the full title. How do you get all that on a thumbnail, everybody?
I know.
But we're glad you're here because you clicked on that thumbnail.
Yes, that's right.
And you're here.
Yeah. And last week, you guys had an important topic. You and that guy,
It
Zach.
might not have been last week.
Oh, I think, okay. Yeah, that's true. We might throw another episode in there.
Maybe. Who knows?
Maybe. Yeah.
We're doing a series.
As far as the series goes, you and Zach previously on previous episodes covered finding a home, finding an IMO, and how important that is, a place to kind of connect with, community you can connect with to be able to sell, right?
Yeah, yeah. The organization that you're connected to.
And I was thinking about this when you talked to me about this series, and when we ran across each other in the parking lot on that fateful day at the church, you know, and
that fateful day,
we got reconnected, and you shared with me what we were doing.
All I hear is like Western music, and the two guys walking up, and
going
all you're seeing is our boots. It's like we're going to duel.
It was very close to that. And you presented me the opportunity and how important
I did not do that in the parking lot.
No, you didn't. Of course, no. We had a conversation, then you invited me to your house, and then you shared the opportunity at that point. But these questions of the things I wish I knew, fortunately, there are probably some things on the home side that we wish we knew back then that we didn't
finding
know.
a right home.
Yeah.
Mm-hmm.
But the one we're covering today is finding the niche. Finding the niche. And we're talking about that because there's a saying, Adam. You know what the saying is? That's not that one. The riches are in the niches.
Now, how come you didn't say it the French way when you just answered that question, Adam?
That's true. What's the other way? Niche. The riches are in the niches.
Niche.
You could say it that way.
Why did you say niche, Adam? Because
Adam speaks French.
Because of French. His wife is French.
Hidden talents all across the board.
His wife is French, and he's learned French.
It's pretty
incredible. So when we say niche, he says niche.
Niche.
What do you say? Do you say niche or do you say niche? How would they answer?
Yeah,
in the comments.
Write it in
the comments the way you say it, phonetically.
Just put French version or something there.
En français.
Yeah, do that.
Yeah, there you go.
Cool. So the
finding a niche. You're vertical.
Yeah, the
Where
vertical that you're going to run into, and this. I think this is important.
Yeah. What type of product are you going to write?
What lane? Yes, the product you're going to write, and this is important because it can be pretty confusing, and you hear a lot of voices, and maybe you're on the TikToker, the old TikToker as the kids call it, and you're seeing videos. I'm relating to the kids, Roger. Come on. They call it the old TikToker. And you're watching videos and you see some insurance conversations popping up.
Do they put the word old in front of it?
No, it's OLE. That's yeah. No, old people put old. And you're seeing these videos of these conversations happening about insurance sales, and you're like, oh man, I'm interested in getting involved. So this niche is a very important part of this, because if you don't have clarity, you can go broke.
Well, what happens is you're usually introduced to the insurance industry by somebody.
Yes.
Sometimes it's answering an ad. Sometimes you thought you were applying for a job. Sometimes it might be a friend that reached out to you and said, hey, I'm checking this out. We could do this together. You want to check it out with me? Regardless of how you get into that, or get invited, generally the organization that you get connected to has one focus. And there's a variety of them out there. And we're going to hit them all. Well, we're going to try to hit most of the ones where you can actually get, I guess, introduced, right? And that you might be your foray, let's say, into the insurance world.
Yes.
And then soon after, you start doing some homework to try to get some more training, especially if you get on this thing called the internet.
Yeah.
Or YouTube, or you find us, which you did.
Yes.
You start realizing, hey, there's other markets out there, and the market that my company or the one that's being promoted to me is not the only one.
Correct.
Is mine the right one?
Yeah.
And you may end up getting green grass syndrome, shiny object syndrome, and then it causes paralysis because you don't know if it's your only spot. So what we're hoping to accomplish in this series is, in number one, find a home, number two, find a niche, which is what we're covering today, is to hit kind of the 5 or 6 or 7 most common areas or common verticals or niches in life insurance sales, and ultimately let you decide if you're in the right one.
We're going to be as objective as we can with this.
Yeah.
And as we do that, though, Roger, I did think of a question. Why is there value in a niche? Why say that? Why not? Why not
do everything?
Do everything. Why the heck not?
In your mind that was funny if you just said it louder.
I trailed off there.
If you said it louder.
Why not? Seriously,
do everything.
Yeah,
why not do everything?
Yeah,
right.
Yeah, just the why a niche? Why a niche?
Well, I would submit to you that there are probably financial advisors out there who consider themselves a financial advisor, and they would say, "What are you laughing at? We should do everything.
Yes,
we should be versed in everything." And then we talk to them about everything that they go, "I do everything." And then when you say, "Well, what about final expense sales?" And then they say, "Well, except for that."
Yes.
Because that's below my market.
Yeah. They've been tying Windsor knots since they were 2 years old.
Windsor knots. This is a form of a necktie knot.
Yes,
yeah?
correct.
Yes, okay. Windsor knots.
2 years old.
Man, this thing's getting off the rails. So, so trying to do everything all at once can be hard. How many of you know that it's hard to be a generalist? It's hard to be a generalist. Mm-hmm. Someone once said to me, if you have a problem with your back and you need back surgery, generally, who's the person who tells you got a problem with your back first?
Probably your general practitioner.
Your general practitioner, you say, man, my back hurts.
Yeah.
And generally, what do they do? They refer you to a back specialist. Yeah. I don't know what that doctor's called.
Orthopedic, maybe.
Orthopedic surgeon?
Maybe.
Something like that. And so you go see one of those people, and they diagnose exactly what's wrong, and they make a determination on what you need done. And ultimately, that's the person you want taking care of that specific problem because they specialize in that area. So are there advantages of finding a niche and getting really good at that? 100%. Because you don't want your general practitioner cutting open your back.
Yeah, that'd be weird.
Yeah, it wouldn't be good.
So
I wouldn't want it.
What we're doing today,
or a proctologist getting involved.
I don't want them cutting into anything.
That's what makes my mind. It's just off the rails. General practitioner.
Yes. So
hold on a minute. You don't normally do this.
That's right.
No, I don't. But today we're going to. Nope.
We're giving it a shot.
Nope. I'm out. Pull the parachute.
And I do think people.
Throw
they do recognize that, though. That's very true. That you would. It's an issue of who can you trust with the special information or specialized information.
Correct.
And that's why we say there's riches in the niches. That general practitioners get paid a certain amount, and then the specialists, orthopedics, surgeons get paid a certain amount because they're specialized in their industry.
Yeah.
So we do have some niches here that we do want to talk with you guys about. And again, we're going to be as objective. Is it objective? We're objective as we can in this. And this, the first opportunity is you may see as term and invest the difference.
Or just term.
Just term.
And maybe just term insurance. Yeah, there's a lot of national companies out there that will recruit you, and they want you to make a list of your 100 to 200 family and friends, and your goal is to go see them to do a needs analysis. And in a lot of cases, you're selling a term policy.
When we talk about that, just so people can identify that specific niche, is that, would you consider that a captive agency? Is that what you're describing there?
Yeah, almost always. Almost always. It's almost always a captive agency, and you're selling their product.
Yeah. And you might work with like a financial advisor along some cases in case you find something else. They have somebody on staff.
Yeah, they have people who have specialized to the next level, so they get you to go in and see people and talk to them about their general needs, term insurance. And then while you're there, you're uncovering other opportunities through a series of questions that you're trained on. And then you hand those opportunities over to a full-service financial advisor. And then the advisor comes along and helps them with the real things.
That's right.
The big stuff.
Yeah.
And then they maybe promote to you, or they may have a track for you to eventually move into a Series 6, Series 63 advisor yourself, where you can actually do some of that yourself eventually once you go through the ranks enough. But it starts out as a term opportunity oftentimes.
And most of the time, you're probably hearing about that opportunity through an ad, I believe. Or
Probably.
maybe more market friend who's introducing you because they see something in you to be able to do that. But more than likely, you're seeing an ad in Indeed, LinkedIn, or
ZipRecruiter, something like that.
Yep. The next one we see is term and invest the difference. What were you thinking of on that specifically?
Well, there's some companies out there who for years have this as their strategies, never buy whole life insurance. Whole life is bad. Whole life, bad. Term, good. And the only thing that you should do to invest your money is to put it in a good growth stock mutual fund.
Yeah.
And there are people out there in the internet world and in TV land who will say that,
yes,
buy term, invest the difference, put your extra money into a good growth stock mutual fund, who I don't necessarily agree with.
We're being objective here.
Yeah, we're trying to be objective, but I don't necessarily agree with that only.
Correct.
Is there anything wrong with that strategy? No. No. But to the point where they're maybe knocking other strategies that are equally as valid or even more valid in some cases. Like if I'm talking to a 65-year-old who doesn't have properly planned for final expenses or funeral costs and they're low income, I'm certainly not going to try to sell term and get them to invest the difference at that
makes
point.
Sense.
Right?
Yeah.
So like there's the realities of life here that you've got to address.
When you're hearing this opportunity specifically, how do you feel like that is wrapped where people are engaging that as a niche that they can enter? Do you have something in mind? I wasn't sure because I don't know how I would say, like, is that with a specific agency that you hear about, or is it just a marketing?
It's one of the larger recruiting platforms out there. I mean, it's from an A.L. Williams model.
Okay,
transferred over into other. It's kind of transformed itself into other types of business structures now. But that idea of it's their sales strategy, a sales approach from the leadership. So you come to that organization, your home, you found a home, but that home then perpetuates or promotes one type of insurance sales, and that's the type of insurance sales that you get into. And oftentimes it's the only one that you're exposed to, and you think this is the only way to go, so we're going to do this with everyone.
Yeah.
One of the reasons why they do that is just to try to keep things simple and to promote fast-track success, to get people making money quickly. So is there anything wrong with that? The second part, what is it? No, not at all.
No.
And that is one area where you may enter the business. That's another entry
your
point.
issue with it is the binary communication of it.
Yeah,
right?
So as soon as we say
right
and
wrong,
invest the difference, that's like saying term and never buy whole life. You always invest the difference in a good growth stock mutual fund. So you'll hear that. You'll hear that language out there. Okay. And you may be in one of those models that's what they believe. Term and invest the difference. And they refer those invest the difference strategies to the advisors inside of that firm.
Got it.
Yeah, but it's never whole life. It's never IULs. It's never any other type of life product. It's term because it's the lowest cost.
Right.
And so sometimes it'll be promoted. This is the best because it's always the lowest cost. I believe there are other uses for life insurance, and we'll talk about some of those in just a moment.
Yeah. Okay, cool. What's What's another one the kids are kicking around these days? Another niche.
Yeah, another niche that a lot of folks find themselves introduced to or become aware of. There's a great book by Patrick Kelly called The Retirement Miracle. You may have heard it.
Yep. Mm-hmm.
He's written several books on that subject, and there's been many books written on this, frankly, not just his, talking about how to use an indexed universal life product for a tax-free retirement strategy. So utilizing the cash value growth component inside of a life insurance policy, the provisions, with understanding what the tax code is and how you can leverage that cash value component or the growth of a cash value component inside of a life insurance policy, where you can actually borrow against it and use that to fund other things or to use it as a policy loan, which by definition is not doesn't have to be paid back, right. Or doesn't have to, is not taxed, because by definition it has to be paid back. And if it's set up properly and structured properly, that's the key part of this. You have to set it up and structure it properly, or else it gets mismanaged, and that's the part that people don't like. But if you set it up properly, you literally can set up a tax-free retirement plan for your retirement years. Even starting out, someone under 25, under 30 years old can start into one of these plans and really create a leveraged retirement using that strategy. And
I guess some challenges there are being disciplined to the commitment you've made to that product for the client. Mm-hmm. As far as the marketing or the niche, I'm guessing I believe there are some lead opportunities out there for this.
Yeah.
So there are some groups that do offer that. And also we see a lot of social conversations on this.
A lot of social media communication about how to use life insurance to change your financial future. And there's a lot of people just educating people through what's the
old TikToker.
Yes, yeah.
That's what the kids are calling it, right?
Yeah. So on social media, whether it's Instagram Reels, YouTube Shorts on YouTube, TikTok, and they may be, educating people on tax-free retirement strategies.
When you're looking at these, Roger, and I'm just looking at the scope of this conversation, where do you see the maybe not barrier to entry, but the ease of entry, barrier to entry for these type of niches? Because that's what I'm probably thinking of when I'm looking at all this stuff. I'm like, how can I quickly dive in and and I don't know if we want to grade those, or if when we just mentioned these first three,
we might be able to grade them.
They seem a little.
Term is a little easier to sell.
Correct. Yeah.
It's certainly easier to sell than IUL tax-free retirement strategies.
Right. So there's a learning curve.
There's a learning curve. Mm-hmm. It's a little more advanced. You have to understand how the products work. And you certainly have to find people who are willing to put money into a retirement strategy, not just to buy the cheapest life insurance.
Yes.
So you're not really selling life insurance. You're actually selling a strategy for financial security in the future.
Yeah, through the vehicle of life insurance.
So it's a different selling process entirely.
Yeah.
So
you better make sure you're connected to people who know what they're talking about.
Connect with people who know what they're talking about, number one, but also have a warm market of people who have the appetite to maybe go a slightly different route than many other people have.
And I think that's helpful.
Finding those people and then having some, credibility yourself.
Yes.
Because if you don't have credibility and you're trying to talk about this to people, you won't get anywhere.
I guess what I'm doing retirement planning now. Weren't you just working at the restaurant?
Yes. Yeah. And now you're going to tell me how to retire?
Yeah.
Yeah. So it is a transition, and it's a tougher market to enter for sure.
Okay. Yeah. Cool. I hope that's helpful for you guys as we're talking about this. Like, what is the entry pointing, how quickly you can get to selling and the learning curve. I think those are important pieces to that.
Well, I think another part of that one there, Chris, is you have to be able to point to people who have success and have authority in this space.
Right.
Because without it, man, you're just like a sitting duck and people are not going to buy your authority. So the easiest way to have success is to be able to point to somebody else that you're working with who's having tremendous success here, who speaks with authority, with conviction, understands how this works, and can be a professional educator, right? And so people who win at a high level in this market area are people who have some financial stability themselves, and
that's a really good point.
I would say they teach financial literacy. Mm-hmm. They teach financial literacy. They're not just selling a life insurance policy. And so that's the difference.
That's very good. Very good. What else? What else we got on the list? What are we kicking around here?
Well, let's jump all the way over to whole life, man.
Okay.
Whole life. This thing that sometimes takes a bad rap.
Yeah, it gets beat up a little bit.
Yeah.
Yeah.
Yeah. Why does it get beat up?
Because of the permanent nature, I think, the cost of it. People feel like
it's the most expensive to buy.
Correct. Yeah.
And so a lot of people feel like you're getting ripped off when you buy whole life.
Right. Right.
And I would say if you don't do it properly, you are.
Yeah. That's true. Yeah.
Cool.
So when we look at this, there are several niches even inside of the whole life. That's what's interesting to me. Like we've talked about IUL. There's niches. Like you talk about life insurance. Life insurance itself is a niche. And then it breaks down into these other niches of term and where it can be used and how it can be used. IULs. Another piece of an IUL, Roger, just going back to that and these niches is, seniors who are looking for maybe a higher face amount with a lower cost. That would be an example of an IUL. You could use an IUL for that.
Yeah. Well, I wouldn't say necessarily just a traditional IUL. Because
correct, yes,
it would probably be a simplified issue IUL.
Yes, simplified
that would
issue.
accept some health impairments.
Yes, absolutely. Yeah,
to get
Yeah, but even there's ways you can use these products. So when we're looking at this whole life, some of the ways that we do have whole life sales available is the bank on yourself option, and we do have another podcast where we did talk about this as well, and it's right here. Thank you. Adam tells me where to point. I appreciate it.
I like how you always say that Adam
I know.
tells you.
I always like to throw Adam out there because he's a class act. But this bank on yourself participating whole life where you can, the participation part is where dividends are paid to the client. And you can use leverage the participation of that or those I forgot the word I just said.
Dividends?
The dividends, thank you. Yes. And you can accelerate paying off debt with your policy.
Yeah. I mean, there's strategies out there literally that you can throw all of your income into a cash value whole life policy. All of it. And then use your whole life policy, the cash value inside your whole life policy, especially if it has what's called indirect recognition of the cash value, so you can access that quickly and use it for your life. You could use it to put a down payment on a car, and now you're using the cash value inside of your own life insurance policy as your own bank. Now you're borrowing it from your bank instead of borrowing it from someone else's bank. I mean, there's strategies out there. There's companies out there. Your personal bank on yourself. There's all kinds of strategies, and I think Nelson Nash is one of the proponents of that strategy. There's some great reads that you can read on that, and that's really leveraging the cash value component and the security of the dividend and the participation product to put yourself in a very strong position over time, and using it for the purposes of complete access to all of your own cash through your policy instead of keeping it in the bank where they're making money on it and lending it out to other people. Because the minute you put your money in the bank, it's gone. Right. They're lending it out immediately.
Yes.
And we just keep putting our money in the bank.
Yeah.
And then we actually borrow on credit cards. We get an interest on the credit card of 16, 18, 19, 21%. We keep a balance on there, and we've got money sitting in the bank that we're not gaining any interest on, but the bank is lending it out to gain interest on it. Like, we're not very smart, ultimately. So, like, we bought into a system.
We do what we're told.
Well, we do what we've been programmed to do.
Programmed. Yeah. Mm-hmm. Well, when you're talking about that, this specific niche, again, I mean, we're helping people build strategies to pay off debt, manage their finances, and this is beyond life insurance in many cases.
Yeah, it's beyond the actual primary function of a life insurance policy.
It's the vehicle that's allowing them to do this, to become their own bank, right?
Because there's provisions inside of a life insurance policy, cash value life insurance, that the Rockefellers leveraged. Mm-hmm. They did. I mean, you just look it up, read it, and you'll find it. So why do some of the wealthiest people in America leverage cash value whole life? One of your favorite people in the world, what did he do instead of taking a raise?
Yeah. It took a raise inside of a life insurance policy. His entire bonus was through a whole life product.
Yeah.
Yeah.
Isn't that crazy?
Yeah.
Like most people don't know that, right? All they hear is like, don't ever do that.
And they won a national
very
championship.
Smart. And what?
Andy won a national championship.
Yeah. And
because of that, guys, because of that product right there.
And where did he win it?
The University of Michigan. Go Blue.
Yeah. And where was that held?
In Houston, Texas.
And where were you when that happened?
I was in the stands.
You were in the stands.
You were too.
And I was in the stands at that game. Yes. And some other famous people were in the stands.
Yes. Our friend, Mr.
Dave Portnoy.
That's it.
Was in the stands. Yeah.
Portnoy.
One bite. Everybody knows the rules.
I had a restaurant in New York City that had a rating of his there, so that was pretty cool.
Yeah, pizza review guy. So maybe we can give Dave a little shout out on this podcast. Adam, let's go. So yeah, we saw that game together and packed, and he won, and he's taking cash value whole life insurance.
Yes.
That guy. What?
That guy.
That
Crazy
guy.
stuff.
So
how do you
work? Yes.
And again, there's a learning curve to this product. So again, finding credible people who can speak with authority that you can learn from and begin those conversations. Again, this is another conversation of people who have assets that they want to use those to pay off debt or bank on themselves. So important stuff there.
Yes.
Next one.
We got other strategies like. How about premium financing?
Boom.
That's a term that I did not know about in this business for about 5 years. I was literally in the business for 5 years before I ever knew about this. Look that up on Google. Google that. Premium financing, life insurance. What the heck is that? Guys, do you know that rich people, they don't even pay their own dang premiums? What? Is that even possible? So it's not just rich people. It's people who have collateral.
Okay.
Do you know that there's banks out there that will loan you the premiums to finance your own life insurance policy if you have the collateral that you will use against the loans?
We're getting into a whole new world here.
I know. It's crazy. But wealthy people who have assets, people who have collateral, you can get a loan, a premium finance loan, to fund a premium finance life policy by positioning an asset that has value against it as collateral in case you default.
Okay.
And these things are structured properly, and the bank finances all the premiums.
Wow.
And they're structured essentially to pay back all of the loan within the first 7 years. So after 7 years, typically there's $1 million or $2 million in cash accumulation that is now yours, and all you did was leverage someone else's money to finance your premiums into a overfunded life insurance policy up to the MEC limit. It's still within the range of what's allowable inside of a life insurance policy. And you can set yourself up for financial gain if you leverage these provisions and use collateral as an asset to acquire the premiums.
How do you identify? Clearly, that's a niche that's happening, and I'm sure those premiums are monstrous.
Oh yeah, they're monster. Yeah, they're
premiums.
Big. Yeah,
and
hundreds of thousands of dollars.
Where are people finding that niche? Are they? Is it ads? Is it?
No.
Yeah, no. They're not going to see that in Indeed
it's
or anything
market
like that.
Referrals. It's a referral based business, and you basically got to network your way into a wealthy clientele, a wealthy network.
Yeah.
And you need to be connected to people who have a high acumen with life insurance sales and how these programs work and how premium financing works.
Yeah.
But they're out there.
Yeah.
They're out there. That's another niche.
So we've almost at this point in the conversation climbed up the ladder of learning curve and accessibility. I would even say as you move up that ladder, like you said, even finding out about that, you got to be in the right circles.
Yes.
Right? Yeah. For that specific last one we did.
Yeah. Because most companies that you might get connected to with life insurance, they're not coming out of the gate with that product.
Right. Yeah.
Because it's a very small market. But that very small market is generally wealthy people, and wealthy people, once they understand how this works, leverage these things all the time.
Yeah.
Yeah. There's another product, mortgage-free life. Mortgage, become debt-free for life, mortgage-free life. They're leveraging IUL strategies, cash value in an IUL, but they're also tying it to a first position HELOC, home equity line of credit, instead of a traditional mortgage.
Yes.
People are going out and foregoing a traditional mortgage and getting a HELOC, which typically for most people, if you think about a HELOC, a home equity line of credit, it's a second lien. Typically, so the mortgage would be the first lien. So if you borrow money from a bank to buy a house or from a mortgage lender to buy a home, and you were to default, the first lien holder is the company who holds that note. Okay, you are slowly acquiring it from that financial institution by making payments, way too much interest, right?
Yeah.
I saw a meme or a video the other day of this giant cavern and a truck backing up to this giant cavern and dumping one little dump into this giant cavern, and it says what every new homeowner feels like when they make their first mortgage payment, because it just disappears. It's a giant
Into a hole.
It's like dumping one dump truck full of sand into the Grand Canyon.
Yeah.
And it's just gone. It's like, where did it go? But that's typically what mortgage interest is on a house. So there's strategies now where people are foregoing the first position lien and getting rid of that. And instead of using a HELOC, home equity line of credit, as a second loan against the equity in your house, you move that to the first position. And then they're tying it together with insurance, and the cash value inside the insurance, and the first position HELOC. And both of those things together are combining a strategy to pay off homes in 3 to 5 to 7 years in some cases.
Wow.
As low as 3 to 5 years in some cases,
Wow.
7 years, even on the high side, a traditional mortgage, and eliminating hundreds of thousands of dollars worth of interest.
And again, big premiums.
Bigger premiums, clearly, because they're leveraging the insurance not for just a death benefit. They're leveraging it for a strategy, a financial strategy as a part of a bigger picture.
Yeah. Well, there's plenty of those.
Yes. Minds are being blown today, Chris, on all of the niches inside of life insurance sales. What is happening over here at the Life Insurance Academy?
The next one that we see is mortgage protection insurance.
That's a simple one.
Yes. Yeah. So we brought it back down to...
And we're settling back down to normal people.
Yes. And the learning curve on mortgage protection is basically understanding your insurance products, understanding the market of how long somebody's typically going to be in the home, assessing the needs, their financial needs, and then underwriting and being able to write that product in a way that's going to be able to meet those needs.
It's basically it's basically a strategy that speaks specifically to the liability that someone feels when they sign on their first mortgage and they have a young family in there, for instance, and they have people that they want to protect if something were to happen to them. A couple of nice bonuses with mortgage protection insurance that a lot of people use when they're in that selling process is it's typically not a stripped down term policy that's a fully underwritten term with no extra bells and whistles. Typically, it's a simplified issue product with instant issue or near instant issue that has living benefits attached.
Yes.
Things like critical illness, chronic illness, terminal illness, so that if something were to happen to you while you're alive, you can actually leverage the benefits of the life insurance policy to help keep you in your home or keep your family in your home while you're fighting this sickness or illness or something that would normally keep you from work.
Yeah.
And so those are some of the benefit pieces. So some would say it's not the old term life insurance, it's the new term insurance that has bells and whistles added to it to help meet that need.
And when we talk about that is generally a lead-driven business. And accessibility, I mean, really, you could start writing business probably within 2 weeks if you have good training.
Yeah, and the leads. You need a lead program for that.
Yes, absolutely. Yep. And then I think this is our final one.
We're at the last one that we're going to hit, for this session.
You want to go ahead?
The last one's the one we started on, you and I.
Yeah, then that parking lot.
Good old final expense life insurance.
That's right.
Final expense life insurance, the Cadillac of all insurance. That's right?
Is it?
Is it, though?
It is.
I think it is.
Absolutely, yeah.
I think it is because I think it meets a need that is in such high demand that is so overlooked because people don't think seniors who are on low, middle income or fixed income or low income, most people overlook, most agents and most people getting into our industry overlook those people.
Right.
And they think, well, how can they serve me? That's not my market. I'm not going to go out. They don't have any money. And yet there's such a big need there because these people have a funeral of $10, $15, $20,000 and it could literally wipe out their family because they just don't have that type of income. And it's helping people put in place a permanent whole life product that is easy to qualify for. In fact, there's a niche of life insurance called final expense insurance. And that's what it's designed for.
Yes.
People who have some health issues, who are older, easy to qualify for, easy to sign, easy to get the policy with instant issue in most cases. And there's so many people that need it.
And I do agree with you, Roger, 100% on this. I actually posted some stats on it recently about how this is continuing to grow as a market. It's not disappearing anytime soon. And I say it's a underserved market, like you said, Roger, and it's also a poorly served market. We see a lot of agents who how do I say, they sling it.
Yeah, slinging insurance.
They're slinging it. They're not paying attention.
They're not serving.
Yeah, they're not serving. They're not assessing the needs of the client. And
it's about them. It's not about the client.
Yeah, so
it gives this industry a little bit of a bad name for those people.
Yeah, absolutely.
But is the market very viable? 100%. Is it economy affected by the economy? Not so much. Mm-mm. Mortgage protection insurance is much more dictated by the economy. Because if mortgage interest rates are high, like they are now, not so many people sign on for new mortgages. When they're low, lots of people get new mortgages. Lots of people refinancing. But 65, turning 65 and the need for final expense coverage, I mean, there's still 10,000 people a day turning 65 right now in America. And so it's a giant population bubble that needs serving. So it's a great market to be in, final expense. It's easy. It's consistent. It's relevant. And so why is all this relevant for a new agent, Chris?
When you are entering into this space, it's important for, like I said, I feel like I got blessed, having that conversation with you. And it was,
I know.
Yes. And for multiple reasons, I was very blessed. And, having the conversation about final expense insurance, even when, I was skeptical at first because I didn't understand the market. I didn't know. And then once I went into some homes and I saw it and I was like, holy cow, this is a need. This is a must have for people.
This matters to people.
Yeah.
Old people tearing up, thanking you, giving you cookies and tomatoes.
Vegetables. You go home with vegetables. You go home with all the good stuff.
Turnips.
Hugs, turnips, all of it.
Turnips and tomatoes.
And the reason we wanted to have this conversation with you is because sometimes you can look at it all and feel overwhelmed in two ways on the entry of it. Like, man, that one with the mortgage stuff, like that sounded really cool because those premiums, man. Like,
I want to make all the money.
Yeah.
But I have no idea how to get into that room.
Yeah. So, there's an issue of time and money for you on trying to make your decisions. And if you're a new agent and you are figuring this out on the front side, then probably do need to look at more of an entry level type of insurance opportunity.
Low barrier to entry.
Yeah. If your finances are an issue, this is a brand new conversation. You're looking for low barrier to entry. You're looking for good support. You're looking for ease of writing business and getting people qualified. Now, if you have a finance background, then maybe some of these other opportunities.
If you have a finance background and you have some finances and you don't need to make money right away and you're willing to go through the learning curve and study under an advisor, you can really start to develop your craft underneath that advisor and start working with their clients that are already there and serving their clients at the low entry level stuff and slowly work your way up to become a full service advisor.
When we talk about opportunity, the thing we talk about is the importance of expectations. Mm-hmm. And it's easy when you watch TikTok and you're a TikToker. It's easy when you talk to the recruiter of an organization and you hear the exciting possibilities of income.
Yeah.
But I will tell you this. I don't care what niche you choose. I don't care what it is.
We didn't even talk about business to business insurance.
No, we didn't.
Second to die policies,
Right.
Key man insurance. Like,
Yes.
these are all business strategies. We didn't even mention those.
Yeah.
But they're there too.
Regardless of what you sell, it's work. That's the most important part, that you understand whatever you're entering into in this arena of life insurance, you will be working if you're going to be successful. That's the truth. And somebody's got to tell you.
Get plugged in, get consistent, go to work, find somebody who's making great money doing what you're doing and learn from them, and try to duplicate. Don't innovate when you're first getting started. Duplicate.
Yes.
If you duplicate, you'll start having success. Then as you start to develop your confidence and your competence,
Yes.
your acumen will grow, your confidence will grow, your authority will grow, and you'll be able to diversify into other areas of insurance and tap into some of those other strategies that may have your interest and you'll be able to pursue. But we wanted this episode to be a part about finding your niche, and we wanted to educate you on all the different ways that people are out there using life insurance. And we hope that this one was an informative one for you. If you got questions, concerns, thoughts, drop them in the comments. We'd love to hear from you. And we'll see you on the next episode of the Life Insurance Academy podcast.